Companies that beat estimates have actually seen their stocks fall, while companies that missed estimates have seen their stocks price rise. How can this be? For more on this trend, we go to Samir Samana, Senior Global Market Strategist at Wells Fargo Institute, and Michael Cugino, President of the Permanent Portfolio Family of Funds. Gentlemen, great to see you. Samir, I'll start off with you. Maybe this is just a sign of what is going on in the markets in terms of what we've seen since the end of the third quarter to date. We've seen the S&P go up by something like 400 points. So we're anticipating a lot when it comes to this earnings season.
Yeah, exactly. That's the key is, so much of investing comes down to expectations versus reality. And what you're seeing is the areas that are reporting that growth continues to be, at a pace that's maybe a little bit less robust than it was for much of the last few years. And so people are continuing to rotate away from those growth areas and towards some of those cyclicals where, although earnings might be disappointing, people are starting to look at the reopening trade. They're looking at what the world looks like a year from now and seeing that there might be much more room for those areas to appreciate from a stock price standpoint, whereas their earnings could also rebound much faster.
Michael, do companies, though, get a free pass when it comes to the earnings call, right? I mean, Samir was talking about looking past this year and looking to next year. Do they get a free pass still in terms of giving guidance? And what is the incentive for a company to actually come out and give positive guidance when things are still uncertain?
There isn't much incentive to do that, really. And I think right now the thing that's difficult with earnings are that there's so many variables in play at the moment that investors have to sort through that is making it really hard to make any assumptions or predictions based on the future. There are general consensus views that I think have some accuracy to them. The post-COVID trade, the reflation of the economy, there is going to be growth at some level going forward. Yes, the Fed's on the sidelines. We're going to have more fiscal stimulus. All these things are real, but it doesn't translate easily to really specific predictions right now. And so you see scenarios where companies beat, but they issue weird guidance and they go down, or the opposite, they miss and they say something positive and the stock goes up, which gets to your original point, Melissa, before we started the conversation. And I think we're going to see that continue throughout this quarter and probably well into 2021. The interesting thing is on an earnings basis, the comps get real good after Q1 because of last year. But the question would be from a valuation standpoint, whether we've already front loaded those gains in 2020 and early 21 here.
Shepard Smith here. Thanks for watching CNBC on YouTube.